Wow, KOSPI is up 3.26%. Hi everyone, I'm Lauro, and today in this explainer, we are breaking down a sudden, absolutely massive upward explosion in the Korean market. I mean, this move caught almost everyone completely off guard.
The sheer energy of this breakout? Yeah, it's undeniable. But, to truly grasp the mechanics of a jump like this, we've got to rewind just a bit and look at the exact setup right before it happened.
See, this aggressive 3.26% recovery didn't just happen in a vacuum. Think of it like a giant rubber band. It was stretched to the absolute limit, amplified by an extreme oversold condition from the prior trading sessions, and then snap.
Right before this massive rally, the market had actually crashed down to exactly 8,203.84. So what was the trigger? Well, it was the U.S. Federal Reserve's dot plot, their official interest rate forecast. It signaled a hawkish shift, pushing those expected rates up to 3.8%. But then, suddenly, the script completely flipped. The primary catalyst that pulled us right out of that dive? Samsung Electronics. They stepped in and confirmed a structural open market buyback program. And guys, the sheer structural weight of this event is absolutely staggering. We are talking about a commitment of roughly 58 billion US dollars over the next 3 years. Let that sink in. This isn't just some short-term trade. It essentially places a massive, multi-year floor of guaranteed market demand right under the stock. Naturally, the market response was immediate and, honestly, violent. Samsung Electronics shot up with a massive daily jump of 9.84%. This incredible single-session surge was so huge it allowed the tech giant to instantly reclaim the #1 market cap position on the index. But the crazy part? This wasn't just isolated to Samsung Electronics. This structural buyback basically forced a sector-wide repricing event. Connected equities like Samsung C&T and Samsung Life Insurance, they shot up instantly too as the market desperately revalued their immense Samsung Electronics holdings. Now, Samsung wasn't the only engine pulling the index higher today. We also saw a massive supporting driver, and that was the biotech rotation. We observed a really clear, decisive flow of capital, just rapidly moving out of the semiconductor space and pouring directly into predictable healthcare names. To understand exactly why this rotation happened, we've got to talk about discount rate pressure. Because the Fed shifted hawkish, those elevated interest rate expectations forced a pretty harsh repricing of high PER, or price-to-earnings ratio, growth assets. Basically, high multiple tech suddenly became very expensive to hold, which triggered this big rotation toward more stable earners. And wouldn't you know it, the Korean biotech sector was perfectly positioned, just standing there with a catcher's mitt. Year to date, they had already secured a massive $8.67 billion in technology licensing deals. This created absolute perfect momentum right ahead of the Bio International Convention over in San Diego.
So, the resulting price action in pharma. Total explosion. Sector leaders completely outperformed the broader index. I mean, we saw incredible daily gains across the board in major names like Samsung Biologics, Celltrion, Altogene, and Peptron, literally pulling the entire healthcare sector up with them.
Okay, but here is the absolutely crucial takeaway from this explainer. Everything we've just discussed, that's only Act 1. That's just the surface rally. Beneath all those glowing green numbers lies Act 2, the hidden canaries. Let's dive in and expose the highly critical, kind of scary, bearish signals that are lurking just out of sight. Here's our first hidden canary, and honestly, it's a shocking divergence. While the KOSPI index and domestic retail investors were busy celebrating this massive 3.26% gain, foreign investors were doing the exact opposite. They executed a total and complete exit of their positions. No way, right? The scale of this exit was just breathtaking. Foreign investors dumped 4.65 trillion KRW in spot selling. And the kicker? They didn't even hedge it with other bets. They paired this with matching future sales, which signals a total, unhedged exit from the Korean market. They just completely bailed. So why the sudden rush for the exit? Well, it all comes down to extreme currency pain. With the US dollar strengthening the way it is, every single tick of won depreciation actively destroys the underlying dollar value of any Korean equities that those foreign investors hold. And this currency strain is historically severe. It actually pushed the exchange rate to 1,541.80. To put that into perspective, that is the highest closing level seen in Seoul since March of 2009. For foreign capital, the cost of staying long in Korea is it's simply getting way too expensive. Plus, there really is no immediate rescue on the horizon.
You see, the recent rejection to add South Korea to the MSCI developed market watch list, that removes the only structural reason for foreign capital to actually stick around. Developed market inclusion can't happen until at least 2028 now, meaning there is basically zero structural inflow catalyst to offset all this selling pressure.
All right, let's move on to our second hidden canary, which brings us to the final battleground of the session, the SK Hynix stalemate. Incredibly, over 65% of all that massive foreign spot selling we just talked about, it was directed straight at a single ticker, SK Hynix. What resulted was just a violent clash of two completely opposing forces. On one side, you have foreign institutions dumping shares because of macro pressure. And on the exact opposite side, you have domestic retail aggressively absorbing 3.56 trillion KRW, driven entirely by the absolute hype for high bandwidth memory, or HBM. The friction between these two massive forces generated a true, undeniable liquidity event. This head-on collision produced an astonishing 19.39 trillion KRW in turnover. I mean, that was the highest turnover recorded in the entire KOSPI for the session. But check out the result of all that historic volume. The closing price barely even moved. It was up just 0.98%. Despite literally billions of dollars violently changing hands, we witnessed an absolute, grinding stalemate between those foreign sellers and domestic buyers. Meanwhile, right beneath the stalemate, the foundation is kind of cracking. We're seeing a really severe divergence in semiconductor equipment stocks. Domestic equipment names like HSP are facing collapsing price action, and they're being heavily dragged down by massive overnight drops in U.S. peers like KLAC and Applied Materials. So what does this all mean? Where does this leave us? Basically, the entire semiconductor sector is completely paralyzed right now. Every single market participant is just holding their breath for the imminent Micron Q3 earnings report. Both this massive stalemate and the equipment divergence, they are going to violently resolve the very second that data prints. The tension in this market is literally at a breaking point. When those Micron numbers hit, which side of the stalemate is going to get crushed? Is it the foreign macro sellers or the domestic HBM buyers? The next structural move is imminent, for sure. If you want to get the Asian market closing analysis before the New York opening bell rings, hit that subscribe button and I'll see you in the next explainer.